Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is overnight market prep for Tuesday, May 27th, getting ready for tomorrow, Wednesday, May 28th. And I'm going to be going over the usual tickers here, starting with the volatility. Of course, it's been a volatile day in the markets, but volatile to the upside. So pretty excited to be going over, the usual tickers. And then also on the list, I am going to be going over Marathon Digital, ticker symbol MARA, Tesla, TSLA. There was a level I had previously talked about, and Tesla did hit that level today, I believe, unless they hit it last week, but it is above that level. Now, also wanted to go over basically gamma ramping in relation to what we've been seeing going on with GameStop, and then extending that to AMC. I think we might also be seeing some gamma ramping there. And then kind of to contrast that with ChargePoint, I remember about a year ago, maybe 10 months ago, I did a video on how ChargePoint was going to gamma squeeze then. And actually, I don't think that that can really happen with ChargePoint right now. So I wanted to go over that. It's all just related to options and the stock price. But there's some interesting, some encouraging things that have happened today over there. So yeah, I wanted to dive into those tickers. I do have the chat open if you guys want to exchange with yourselves, but I can't see it. I'll open it towards the end of the stream so I can see it. Just don't want to be distracted. But I must say I'm a little bit of a mess tonight, so I might not be able to do a full hour stream just because, I got to still get myself ready for tomorrow. But anyways, let's look over here at the UVIX, beginning the usual list with the UVIX. Ticker symbol UVIX, which is the 2x long VIX futures ETF, which closed today at $28.31, being down about 20% on the day, so pretty massive. If you guys are aware, I do hold a small position in UVIX just to hedge, in case things do go south, and it did seem like that is what was happening on Friday, May 23rd, closing on the day last week at a price of $35.97. That was actually above my average. Now $28.31 is below it. So that's a little bit unfortunate. I should have trimmed over here as, while during market hours on Friday, it did hit a high of $35.97, which is close to 36, approximately being at this downtrend, nearly getting to this gap fill at 38.12, but actually the VIX did fill a gap there. So that was maybe a sign that we would be seeing a pullback like this. But anyways, if we do take a step back, we can see that the UVIX has consolidated between these two parallel lines, or these parallel lines, I guess I should say, with the tops corresponding with the high over here from September 6th, the peak after this massive spike, and that began to form this channel that price kind of consolidated in for many months before breaking out over here. So even if price does hang out down here for a while, maybe it bleeds down to the mid 20s, maybe around 25 where that purple line is. In my view, it's really no big deal because I think that there will again be, another big spike in the volatility, a spike in the UVIX. And so going from this peak to the peak over here, that represents, 250 days basically. So, even while it bleeds down here in the channel, you could just continue to stack it over time very casually for if in case the markets do roll over, there's a panic sell-off. It could be nice to holding some UVIX just to then be able to take profits on these spikes and then have some cash when everything else is on sale. So yeah, if I'm able to swing this for 20+%, I'm excited about that. But if not, looks like I missed my opportunity to trim out, I believe, at about 5% in the green, but I did, miss out on that. So, oh well, we do see a gap down here with that open being at a price of $30.91, then closing, like I said, at $28.31. And so as I had mentioned, based on the close from Friday, it's down about 20%. But if we look at the price action from open to close, it only came down, let's see, about 8%. So about half of the downside was during market hours, and actually more than half of it was effectively over the long weekend with that gap down. So yeah, I mean, for me, I don't have any buy orders placed on this. I could see it coming back down to the lows over here around 26, 23, maybe testing 27 again, bouncing from there, finding that as support. But like I said, no buy orders placed. I'm just going to kind of wait and see. I suspect that this will be bleed down to 25 or so, and then maybe I'll start to evaluate again there to maybe add to my position. But right now, just evaluating to kind of understand the markets, understand what is going on. And then so here, looking at the 10-minute time frame, we can see what happened. Looks like in the overnight from yesterday when I streamed last, we saw this massive gap down, hugging the level here right around 32 before fading towards the end of the overnight trading into the pre-market, holding that level around 31, but then continuing to sell off below 30 and then closing the day at 28.31 and actually hitting a low of 28 in the overnight trading, but it is up a little bit. Looks like it's at 28.33, so 2 cents above where it closed at. But yeah, I think that this is just a nice hedge. Good to slowly accumulate and then to take advantage when it spikes. But the spikes, as you can see here, this spike was about 35% move from the very bottom to the very top. And so that is really nothing compared to a move like this, which went up by, over 260%. So you can't really expect that all the time with the UVIX, but if markets do tend to roll over, like I said, this can be a nice one to hold, to trim, and then by selling, you then have cash on the side for getting other stocks that are dipping. But yeah, let's look over at the VIX real quick here so we can see that gap was filled there, that blue line, which was at $21.90, which was the close from May 9th. And so we did close, as I suggested in last night's overnight prep. The close on Friday was 22.29, but considering the gap down in the UVIX, I expected the VIX to then be trading below 20, and that is exactly what we have seen. The VIX, which I should note is the Market Volatility Index, which is what the UVIX is based on, this closed below $20, below 19 at 18.96, being down about 7.83% on the day with this nice red candle here. We'll see if it can hold some support right around 18. Does look like it dipped to a low of 17.15 over here, but that 786 looks like it's at 17.91. And let's just take a step back. What's that 786 based on? That is from this retracement over here, so kind of like the left shoulder in what could end up being, a head and shoulders pattern, which, it's an index. I don't think it would necessarily play out, just drawing the similarity there in that shape. But yeah, that's 786 at 17.91, right around $18. Kind of acted as support over here, but I don't necessarily view that as too significant of a level over here because it was bounced from here. It was bounced from again, but it was a pretty small bounce. So I think the next time we do come down to 18, we could be breaking below it, maybe heading down to this level here, right around $15. So we will have to see. But yeah, I think that the markets are in rally mode, but maybe it's going to be short-lived. I really have no idea, but it doesn't really seem like it. It seems like we could be continuing to go higher. And so with that being said, let's talk about what's going higher. Looking over here at the SPY or the SPY, the S&P 500 tracking ETF, which closed on the day at $591.15, being up just over 2% on the day. But it looks like in the overnight, it is pulling back a little bit, but just, 9 cents. So no big deal. And yeah, what we can see is we've seen this nice little bounce that is kind of following this doodle that I have here. It didn't go all the way down to this level around 570, talked about it many times during the streams, but yeah, getting a bounce up to around 590, this yellow line here, which the low on May 16th right here was at a price of $589.28, marked by that yellow line there. We did close above that, so that is looking pretty good. And I think that we could continue to see a rally, potentially getting back to $600 and maybe even getting up to the all-time highs, which was 611.39 for the SPY. So yeah, I mean, I would not at all be surprised by that. Seeing this massive V-shaped recovery seems like there is a lot of strength, and seeing this kind of fake out breakdown, which maybe it ends up continuing to break down, but with this bounce, the 2 green candles over here, really 3 green candles, we can see that it was starting to roll over, breaking down from this rising wedge that I had drawn, but maybe it's a fake out breakdown, or maybe, it starts to get into some resistance around 600, that being a psychological level, and then it does start to roll over to fill some of these gaps to the downside. But yeah, I mean, I feel pretty convinced. I feel compelled about this going higher, just because people, flipped too bearish, and, they're only going to flip bullish once we get back to all-time highs. And so I think that, the market really needs to be exploiting people, taking advantage of those emotions of when it's down here, everybody's bearish, and that's the exact wrong time to sell. So money is then made on those weak hands. And then up here, when we get back to all-time highs, people get bullish again. And, and then, that becomes... some liquidity there at the top. So longs can get out of positions, and then maybe it comes back down once everybody flips bullish again. So yeah, interesting to think about it like that. But I do think that this could be going higher. And if we look over at the 10-minute time frame, this was actually pointed out by Colin Gladman. I saw this on X today. Just, this really weird, wick candle coming down, dip into 578.43. We had seen candles like that, or I should say wicks like that over here. It looks like on May 19th, lots of really weird wicks to the downside, whereas price generally seemed to not be corresponding with those massive wicks. So yeah, I mean, we are seeing that kind of weird stuff happening again. That low was at 578.43 during market hours, which did register over here on the list. So that's a pretty interesting one. Let's just consider this with looking back at last night's overnight trading. Saw that gap up, a little bit of a dip, but then it did close the overnight trading session higher, pulled back a little bit with a dip at market open, but then it just continued to rise, then closing above 591. So looking really good there, pretty... it's just been a crazy day. Lots of stuff to talk about. So, I'm going to keep moving on, but just to look real quick at the SPX, which is the S&P 500 index, what the SPY ETF is based on. And so the SPX did close at $5,921.54, being up 2.05%, whereas the SPY was up 2.08%. And we can see, that we did get above this level here, and that red line at 5,865, right around there. But actually the low that I had marked on the SPY, I believe, was from the 16th, and that low price was 5,907. And so we did close above that. So yeah, I mean, this is looking pretty good. We could be seeing this doodle play out, just not, getting the super nice dip that I was suggesting could be happening, which would be from a range of around $5,700 down to this gap that has not yet been filled around $5,660. So yeah, we'll have to see where this goes. I feel like there's some data coming out tomorrow, or maybe some notes from the FOMC that happened a few weeks ago. I'm not really sure, but there could be some more news, tariff news, stuff like that, that either propels this higher or maybe we get rugged. So good to be planning for either the upside or the downside. We're in a volatile market, so it's tough to say. Only people's best guesses, and my best guesses are, I'm just learning as I go, basically. But then if we do flip over to the next one, this is an exciting week for Bitcoin. Currently at 108,000. It was at 109,000 before I started streaming. And the reason why it's so exciting for Bitcoin is the Bitcoin conference is going on right now in Las Vegas. There are going to be some announcements. Maybe GameStop announces that they have Bitcoin on their balance sheet down there. Maybe something else, maybe a new country like El Salvador is adding it to their balance sheet or to their, their currencies that they accept. So could be a very exciting week. I suspect there will be a lot of news with people from the Trump administration speaking there. Cynthia Loomis, Michael Saylor, of course, I believe he spoke last night. And then just tons of people. I drawn some blanks, but lots of people. Bitcoin could most definitely be going higher, but historically during those Bitcoin conferences, Bitcoin has tended to sell off. So I'm actually pretty impressed that it's holding up here above 108. I have talked about that as being, in my view, a pretty important level, but I also talked about yesterday and in Crypto Corner Sat Stacker that Bitcoin, I think, could be dipping to around 105 this week. If that doesn't happen, that's great. But if it does, I might dip by a little bit. So I'd be excited about that. And then the next move to the upside that I could see is probably going to be right around here at around, let's see, 115,000 dollars. Sorry, it's such a big number. It's kind of tough to read. But yeah, over here, 112, that was the high. Maybe we get a couple thousand higher than that before maybe we start to get the next maybe 2-week cycle of consolidation. And it does seem like these upside moves have been getting a little bit shorter as it does move higher. So maybe we get another leg or two up before maybe we see a more notable correction. So good to be planning for that, or be prepared for that, I guess I should say. And let's also look over at Ethereum. This is one that, I kind of based my thesis on with crypto because everybody's just trashing Ethereum, currently trading around 2,600, up more than $1,200 from the lows that it recently hit here, sub $1,400. That is up nearly 2x from those lows when everybody was trashing ETH. When everybody goes bearish, that's actually the time to buy. And I think that ETH is a great indicator of that, because whether it's because of Vitalik and how he runs ETH, or just, the process of ETH, it's just people get really bearish on it. People lose a lot of conviction in it, and then it really surprises people. And I've definitely been surprised by ETH in the past, and so I am excited about it. Potentially getting up to $3,000. I think that's very feasible, very realistic. I think it could be getting up to 33, where I have this 100% Fibonacci retracement. I might color that light blue just so you can see the retracement there a little bit better, distinguishing it from that white. But generally, I could see this getting back to 4,000, potentially new all-time highs above 5,000. By the end of the year, I could see it hitting 8,000. So yeah, I like ETH, but I'm just chilling though. I'm not doing anything too crazy, just my normal daily DCAs with Bitcoin and Ethereum. Because I think that it's going to be a great year for both of them. But anyways, let's flip over now to the tickers that I have on the list. One that, while it doesn't relate to Ethereum, does relate to Bitcoin. Let's look at Marathon Digital real quick, ticker symbol MARA, which did close today at a price of $16.44, being up about 11.6% on the day. And so I have to say that there were a lot of posts over the weekend, and actually that does tend to happen over weekends. I was going to say posts of people worrying or suggesting that Bitcoin, Marathon, or others would be collapsing, rolling over, correcting, whatever. Over weekends, if there's a little bit of concern on, Friday before a 3-day weekend, this gap down red candle hitting a low on the 23rd of 1458, although coming to this uptrend that I have, let's see, what's that uptrend based on? I think that uptrend is actually, that's just, a little casual trend line there. So I'm not exactly sure how I drew that, but it does intersect with the lows from Friday there. So probably that was intentional. And did pull back into support. It had acted as support over here. And we did get a nice bounce from that. But over that weekend, people are able to spend the time without the chart moving, seeing what Bitcoin is doing, but not what Mara is doing. And they start to think, well, this may have broken down. I can draw a trend line from here to here, and it looks like it gapped down, breaking that trend. That looks really bearish, and so I'm going to worry about it over the weekend. I'm going to post about it over the weekend, and then other people are going to see that, then they're going to worry more, and it just kind of amplifies this worrying that builds up over weekends. And we actually saw a very nice bounce. So I think that what we saw, that dip down to, like I said, 1458 was that low. That was probably a very nice dip buying opportunity. Now we are back above this yellow uptrend, which I had talked about, that corresponding with this inverse head and shoulders pattern here, which would suggest an upside move to around $20, give or take. We started to consolidate here, forming a bull flag. So I thought that looked really good, but then we did it break down. Panic over the 3-day weekend. Opportunity over the weekend. And and so I did go over it before, but that yellow trend line does go back to the lows from December of 2022, as well as the other pivot point being the lows from October of 2023. That's also the beginning of this red trend line, with the other pivot point being August 5th of 2024. That was a pretty historic day, lots of panic in the market there. So, very important pivot points there that make these trend lines. And we are currently trading above that yellow one, and getting up to that red one would put price around $20. So I still feel really good about this. I do have a call position, which I can just show real quick. Not my position, but the contract. This is the $50 strike call that expires in January. So got 200 some days between now and expiration, and it looks like it was at 93 cents at close, up 12% on the day. My average, I believe, is $1.05, so that's $1.05 per contract. Each contract, or I should say, $1.05 is the price per share of the contract. Each contract represents 100 shares, so $1.05 translates to $105. And it's currently below my average. I had wanted to buy the dip at 70 cents today, but the low was actually 85. And so what I've done, I don't have a very big position, but I guess it's kind of notable given that options are risky. They can expire worthless, all of that. But I did place some more buy orders today for tomorrow at 70, 80, and 90 cents if we do get a dip. But I feel like the bid price to get a fill for buying, I believe that would be it, is actually around, let's see, I'm not going to pull it up, but is around one. It's above $1, so I may not get any of those orders filled. That's totally cool. I think that this is going to go a lot higher, and the stock, and so I think that the contract there will as well. Potentially getting up to 50, potentially getting up to 80, which is around the all-time highs for the stock. But then anyways, let's flip over to the next one on the list, which is going to be Tesla, ticker symbol TSLA, closed on the day at 362.89, up almost 7%, actually 6.94%. on the day. Hey, it's like 69,420. If you just continue on, maybe there's a fraction of a penny that's a 2 and then a 0 after the 6.94% up. So got to have fun with it. But yeah, anyways, looking over here, I was looking for Tesla to move up to around 360. I had alert at 360 because I was planning on getting either some TSLS, which is a short ETF on Tesla, or TSLQ, which is 2x leveraged short Tesla. Personally, I would probably not do the TSLQ because, bad to be wrong with something like that. But because we didn't get up to 360 over here, actually the high on the 20th was 354.90. Did see a nice little pullback there. So that would have been a nice trade for shorting Tesla here via that ETF. But then we have seen this bounce. And since what we have formed, in my view, I'm just going to do a little Fibonacci extension here from, approximately the low here to that high, and then pulling back here. I'm just going to make that light blue so we can distinguish it. And the 100% move, that is the distance from here to here, taken from this point up. That would be bringing price to around 415, 416. So because we consolidated here, that looks to me more like a bull flag rather than a rejection. So I don't want to be shorting Tesla right now, but other levels to be considering that might be acting as resistance. I believe Colin Gladman has talked about these, but I also know that he looks at charts with the log y-axis and also the fibs on the log scale, which I'm not doing here. This is all linear. But what we can do, which is maybe similar from something that he would do, is a Fibonacci retracement from that top here at 488.54 down to that low when Tim Walz was trashing Tesla, a low of 214.25. So from that, we can see that the 618 is around 383. So I do have an alert there at 383. Maybe it looks like it's starting to get weak, or things are starting to cool off in the markets. We can also see that, there was some support over here around that level, so that could then be acting as resistance. And also, just because I had this level marked at 360, which I believe was the 50% Fibonacci retracement, we can see there at actually 351.39. So getting past that 360, oftentimes when I see a level, I have it marked. It's like, oh, it hit the level, I'm going to establish a position, but then it goes beyond that level, and I kind of end up holding the bag for a little while. So for me personally, I am not shorting Tesla. I have a very small share position, but I hope that I'm able to buy the dip if it ever comes back to 300. But if not, I will just casually, very small, incrementally be increasing my share position over time. If it comes back to 300, great, I'd add more aggressively. If it doesn't, then I'd chill out, but I'd still add a little bit here and there, spreading those buys out. But yeah, I think that 380 could be acting as resistance here. I think that the 786 here around 430, that was the top over here. Also some consolidation right around there, just above it. So that could be some resistance. So I think that it's not the right time to be shorting Tesla. And something pretty funny about Tesla that I saw on X was this post from this guy. I just started following him. He posts a lot of Tesla Silicon Valley stuff, I believe. But he just said, Redditor posting his Tesla short position, FAFO, F around, find out. This guy says, how effed am I? And I actually checked out this post, pretty funny, this discussion. And it's just a bunch of people like, oh, it's just shares, it's not options, they're not going to expire worthless. But actually, when you're dealing with an ETF, especially one that's leveraged and inverse, that can actually go to zero because, personally, I don't think Tesla's going to go to zero. So that means that there's a lot of upside potential. If it continues to go up, those shorts are going to go to zero. And also with that ETF, there were reverse splits and stuff like that. So, I just think this is too funny. So I wanted to share that. So yeah, I mean, with this being posted now, with people talking about how high Tesla is relative to where it was when Tim Walz was trashing it, I think that, maybe it's a little bit risky to be going super short right now, because these people could still be very wrong. Or maybe calling them out, posting this, maybe that's a topping signal. I really don't know. But regardless, I mean, this person, risked nearly $4,400. They have since then lost over $44,000. They've lost over $12,000 currently, with a market value of $31,000. And, it's like, oh, it can't go much lower. People say that all the time. But yeah, it actually can. It could go to 20,000. It could go to 10,000. It could go to zero. So, yeah, good to think about that and not be trading your emotions, But anyways, speaking about trading our emotions and just having some fun, I wanted to talk about some options data, really Max Pain data with GameStop, because I think that this is kind of a nice example of what a gamma squeeze can lead to. I think it's still going on. I don't think we're going to see this pullback here that I have doodled there, and I actually didn't really want to go over the chart too much, but maybe I should mention that GameStop closed today above $35 a share, closing at $35.01, being up nearly 6% on the day. So looking really nice there, nearly getting to this orange 100% Fibonacci extension that I have drawn there. Maybe you can see it, maybe you can't, but that's around $36.40. We did hit a high nearly getting to 36, hitting a high of 35.74 on the day. But yeah, I mean, what I wanted to talk about, I actually kind of wanted to remove my drawings, and I wanted to switch this over to the weekly time frame, because I really just wanted to look at the weekly closes and see how they relate to what Max Pain has been, because I think that we will see that we have for many weeks been closing above Max Pain, and that is what has been triggering these moves to the upside. And not because we've been closing a little bit above Max Pain, but we've been closing multiple strikes above Max Pain, and because of that, that is driving the price up, because some of those calls that are closing in the money are going to get exercised, and then so market makers need to then buy shares to be able to cover those calls when people want to exercise them, to cover those positions, to have the shares. So it forces the price up. But if we do look over here at the Max Pain for GameStop, not GE, GameStop, we can scroll down here to see, let's see, the historical Max Pains, just to look at them over time. And it would be nice if this was like in a table. But yeah, I mean, apparently it's not, so we just got to look at the data here. And so let's see. So the Max Pain for the 23rd was $28.50, and the close was $33.03. And so let's look at that. The close $33.03. So Max Pain was $28.50. Right around here where the cursor is, right around there. So we closed considerably above that, with strikes being in 50-cent increments. That is, I believe, 8 or 9 strikes above the Max Pain. So that is why we see these big pushes to the upside. But then what was the Max Pain the week before? The prior week on the 16th, we closed at 28.45. So what was that Max Pain? And so we can look over here for the 16th. Max Pain was 27, closed at 28.45. So we did close nearly 3 strikes above that Max Pain, with there being one at 27.50, one at 28, and then nearly closing at 28.50 above that next one, but we were just a little bit shy. So yeah, that's multiple strikes above. So that suggests there is going to be some upside pressure. Then the week before, on the 9th, we closed at 27.54. And let's see over here, the 9th, 27.54 was that close, as we can see, but the Max Pain was 26.50. So we closed two strikes above that max pain. So that max pain at 26.50 and then 27.50, two max pains closing at 27.54. So that's going to put some pressure on it to the upside. This is that gamma ramp that I'm talking about. Okay, and then on May 2nd, closed at 27.48. And then if we look over here, it was that May 2nd. So let's go back in time to see the data over here. 27.48. The max pain was 26.50. So we closed one strike, nearly two, above that max pain of 26.50, pushing that up. And then here on April 25th, maybe I'll just go back a few more of these weeks, but April 25th, we closed at 27.46. 27.46, max pain was 26. So 26.50, 27, two strikes, nearly three strikes above that max pain. And then the week prior to that was April 17th. And the max pain was 25, whereas we closed at 26.78. So 25.50, 26.50. We closed three max pain strikes above max pain there. And then I'm just curious to look at these two green candles to see what those are. So I know this is probably just a long list, but just curious to look at this. So the close on April 11th was 26.40. So on the 11th, April 11th, we saw a close. 26.40 we see there. Max pain was 23.5. So two strikes, actually many strikes above that max pain, because there's 23.50 is max pain. And then so we've got 24.50, 5.56, five max pains, nearly six strikes above that max pain, which would have been above 26.50. And then over here on the 4th, we closed at 23.49. Let's see on the 4th, where is that? 23.49, max pain was 22.50. So again, nearly two strikes above that max pain. And then just out of curiosity, this big red candle, we closed at 21.73. And what day was that? That was March 28th, closing the month. So March 28th. Let's see over here. Max pain was 24, and we closed lower than that. So, following this massive red candle, we have closed considerably above max pain every single week. And so that has been resulting in this price going up like this. Upside move, bull flag consolidation. Upside move, maybe we see bull flag consolidation, or I suspect we continue to see this candle increase as the week is not over. We still have 3 more trading days this week for this to go higher. And then, so yeah, just looking at this over here on the daily and then scrolling up here to see what the max pain is for this week. It's $29 for GameStop. Let's see, is priced above $29? It's very much above $29. So let's just look, let's say we close this week at 25. Let's say we just have, bullish consolidation over the course of the week. And so let's see where we are right here. This is, we're above this 35, but how many strikes do we have between where we're at and the current max pain, which will probably go up over the course of the week. But we can see that there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 strikes above what max pain is. So that's pretty massive, and I think that could result in GameStop going a lot higher, especially if they announce some news about adding Bitcoin to the balance sheet. So here it says Vivek Ramaswamy's firm wants to buy biotech companies to bet on Bitcoin. Bitcoin stuff. GameStop is now synonymous with Bitcoin, and this is the 4th year in the cycle. Bitcoin's going to be rallying higher. So yeah, I just think that GameStop is set up to be going a lot higher. Perhaps by the end of the June, we'll be seeing, triple digits getting past, I believe it was the pre-market high of like 80.01, something like that back here, May 14th, I believe was it? Yeah, of last year. And so maybe we get into the triple digits. I could see it happening. So I'm really excited about it. But yeah, and I also kind of wanted to relate that to AMC because AMC has really started to break out, but I don't think that they have actually been performing that well regarding their max pains, or at least not well relative to how well GameStop has been. But it looks like AMC is starting to change that, as we can see that AMC closed at $4.01, being $1 cent above $4, which is interesting because GameStop was also 1 cent above $5. I wonder, maybe that's something to like lure retail in. Hey, we closed a penny above, and then they get rugged. So yeah, I mean, I could see, in all honesty, a pullback in both of these, trying to discourage people. But I think that those would probably be dip buying opportunities. Although we do see the RSI has pretty well extended over here at 85.45 for AMC. So maybe it would be healthy to see a little bit of a cool off before this continues higher, like maybe see a pullback to test 368 and then launch up. But I also have to note, while mentioning 368, that is the level where we raised capital at. So I know it was announced over here when the stock was trading above $5, but we ended up raising capital at an average price of $3.68. So we're kind of in this danger zone now of where we could get diluted. We could have some capital raising going on. So I feel like AMC is definitely more risky than GameStop. So good to consider that. But you can't deny this momentum being up 23.77% on the day, whereas GameStop was only up about 6% on the day. But, just like what we did with GameStop, let's look over at the weekly candles here for AMC, and let's see what we can find with the max pains here. Looking back in time at the historical max pains to see if AMC was triggering potential gamma squeezes, or if now we're just starting to do that, which I suspect is going to be the case. And so what we can see here for last week that closed on May 23rd, we had a closing price at $3.24. And so what was the max pain from, let's see, I've got the worst memory, May 23rd. Let's look over here. May 23rd, closing price was $3.24, and the closing price was $3.24. Max pain was $3. So we did close above max pain, but considering that strikes are in 50-cent increments, we didn't close multiple strikes above max pain. So not really that impressive there. But it is good that we closed above max pain. And let's just see the week before. So on the 16th, we closed at $2.95. Let's see what the max pain was on the 16th. Closed at $2.95, but max pain was $3. So we were previously 5 cents below max pain. Then we moved to be 24 cents above max pain. And then now, with price at about $4, what is max pain for this week? Is it $4? No, it's actually $3. And so if we are to be closing, above $4 a share this week, which I think is feasible, we have this max pain here at 3. If we close at, let's say, 455, and maybe max pain increases to 350 because of the current price action, people are betting on it going higher. And so if we close this week at 455, that would be 2 strikes above max pain if it is bumped up to 350. And so that could definitely be starting to trigger, a gamma ramp or gamma squeeze, basically like what we're seeing going on with GameStop. So I think that it looks like there's a lot of potential here, but like I said, there is risk in the announcement of some dilution while price is taking off. So maybe this gets up to 5, maybe this gets up to, double digits. Maybe we test, 1188, which was the highs from May of last year. But But then, I think that there could be an announcement, hey, because price is up, we're going to dilute, we're going to raise some capital, and then we see a sell-off. And so that could really kill momentum, especially if, the stock is running into Friday. Maybe we get an announcement Friday morning pre-market like we did over here, and we really get rugged. So good to be cautious about that. Oh, and another thing that I almost forgot to mention. So for me personally, I do have a number of AMC shares, and what I like to do, which is very risky right now, I like to sell covered calls. Just to collect a little bit on the position that I have. And currently the max pain, or sorry, not the max pain, currently the highest strike for this week's contracts is $6. So, in all honesty, I did sell a few contracts with a $6 strike. So if the stock closes above $6, I would either have to sell those shares, or prior to close on Friday, I would have to roll those options into next week, roll those contracts into the following week, so I could then continue to potentially hold them. But if it does continue to go up, I would basically be forced out of those shares at $6. So selling covered calls, definitely very risky. But one thing that I have noticed in the past, whether it's with AMC, GameStop, other stocks, is currently the highest strike here for this week is $6. But if we see tomorrow that the highest strike is 7 or 8 or maybe 10, that is market makers trying to dilute that pressure on AMC, because let's say it's going to be closing above 6 and people want to bet long by buying calls. And then they would just go to the $6 strike because that's the highest strike they can get. If it's trading above 6, it's in the money. It seems safe. But if it starts trading above 6 and the only call options are in the money, they're going to add more to this table. And then so let's say I'm bullish on AMC and I want to buy these $6 strike calls that expire this week. If they're in the money, they're going to be more expensive, and then I'll see, oh, well, I could just get an $8 strike or a $10 strike. And so it kind of dilutes that pressure, the gamma squeeze pressure. And, if there's a lot of interest in the $10 strike, but it closes at $9 or let's say $7, which is above this strike, that pushes some bulls into losing some money on those bullish bets because they got greedy, they got overly bullish, and that is a good way for market makers to make money on that premium, whereas retail ends up losing. So I think it's a good idea to keep an eye on this highest strike for AMC contracts this week. Currently, it's at 6. I suspect it will be increasing this week, so do keep an eye on that. And then also, stemming from the difference, kind of going into a gradient from GameStop to AMC, and then looking at ChargePoint, I kind of wanted to make the case for why a gamma squeeze can't happen with ChargePoint. I might actually just pull up, let's see, the DGen Ed channel over here, see if I can search the channel for gamma. And let's see, this is for tonight. I did one on Neo, did one on Unity. ChargePoint, this one was from 10 months ago, ChargePoint and the case for a gamma squeeze. So at that time, it seemed like there was quite the potential for a gamma squeeze because of what I was seeing in the options data with the stock price closing above, multiple strikes above the max pain. But if we look at ChargePoint, like what I was talking about with GameStop and AMC, those strikes are in 50-cent increments. So ChargePoint, given that it's trading below $1, if we do look at this on the weekly, we can see the data there. It's going to be tough for it to be closing multiple strikes above max pain if it's in 50-cent increments, because there's not going to be a strike for $0. There will be one at 50 cents, $1, and so on. So there's no real possibility for a gamma squeeze to happen because It did close, I believe, above max pain on Friday. So last week we closed at 72.35 charge point. And also I'm saying I personally no longer have any position in charge point, but just we as in retail, I'm rooting for everybody here. We closed on Friday last week at 72.35. So let's check out, just like what we were doing with AMC and GameStop, let's check out charge points, max pain historically. So from last Friday, so let's see, on the 23rd, the max pain was 50 cents. So we closed above it, so that's good, but we didn't close any strikes above max pain. We just closed above max pain. And so it becomes very difficult for a gamma squeeze to start happening. And so the max pain for this coming week is $1. So maybe, especially with the end of the month coming up and having talked about charge point being below $1, having non-compliance issues, what I've seen happen, you can look back at the Nikola chart, I believe more recently with Plug Power, running up to around $1 by the end of the month, but then it dropping off after that. And so that's really just, for exit liquidity, for it to run up, hey, look, it's above $1. There's not going to be a reverse split, but it needs to be above $1 for 30 consecutive closes. And, I think that's going to be tough to see. And so if we do see charge point run up to $1, I've got this alert here. I think that would be exit liquidity, and that there would be a sell-off following it, because I just don't really think that there's much potential for a gamma squeeze or a gamma ramp, considering the share price trading between 50 cents and $1. There's just really no potential for it, at least as far as I understand how gamma ramps, gamma squeezes work. But because it's a cheaper stock, the market cap is less than $400 million, $336 million. If somebody, let's say a big player, wanted to pump this up to $1, they could easily do that. And then they could offload their shares up there, selling it to retail as exit liquidity, and then pulling it back down before a reverse split's announced, and then it just bleeds even more. So I just think that's something important to be paying attention to. And actually, Alex, I don't know if you're watching this, and it's, I'm sorry, I'm going to butcher your last name. I feel like I put a T in it, but let's see, just some exchanges that I've had on X. Marinelli. Is it Marinelli? Hopefully I'm pronouncing that right. I think I put a T in it. Sorry about that. I get a little nervous when I make these videos and I just kind of go into autopilot. So excuse me if I mispronounce anybody's name. But yeah, Alex was saying that, I flipped bearish. I'm really just trying to manage risk, just trying to be realistic and trying to manage my portfolio better. I would say I would flip bearish. Really right now I'm neutral because I don't know if it's going to break out. I don't know if it's going to break down, because it's trending along this line here. It's really tough to say, but like I had mentioned, the volume does suggest accumulation, not distribution. So that seems good. But with that looming reverse split, but anyways, I'm going off on a tangent here. I would probably get bearish, in all honesty. You actually gave me the idea for this, because I don't really feel like I'm bearish now, just trying to, risk management. But if it did go up to $1, I'd be intrigued to actually buy some puts that expire in August or later. So let's see if we look at the options table. Yeah, this is just really, it's kind of a lame options table. Strikes 50 cents, that's the only one that's in the money. And then all of this stuff just going up to $3 out of the money. So it's just an easy stock to push down. There isn't really potential for a gamma ramp to happen like with GameStop or, even with AMC, just because their share price is above $1. It's just a little bit easier for those. But if we look at these strikes, I'm looking at calls here. So I'm not looking at the prices of these contracts, but let's see. There's some contracts that expire in August. Let's look at the puts for August. That would correspond with around when that reverse split would be. And we can see that, $1 or 50-cent puts, if price does go up to $1, I could see buying some 50-cent puts. or maybe some, maybe just one, having fun with it, experimenting with it. But I could see that being not necessarily a good for being bearish, but a good way to hedge. If you are long, not giving any financial advice, but if you're long any stock and maybe it goes up to a level that seems like it could be at resistance, like in my view, that would be around $1. That's a very important level that charge point needs to be above. If it were to get up to that level, I would think, hey, that's a shortable level. And so that could be a nice way to hedge. If you're long, you can stay long, but then if it doesn't continue going up and it starts to go down, then you can make a little bit of money as the price goes down, sell those contracts, don't hold them for a long time, flip them for 20%, 40%, whatever percent profit, maybe 2x, I don't know. And then the cash that goes into those puts could then get rolled into shares. So, I think that's a nice way to kind of balance trades. So if charge point does go up to $1, I'll just pull it up here. I do have an alert that for when it goes above $1, I'll be notified, and then I'll do a video kind of going over, or maybe I'll just include it in one of these overnight or pre-market preps, going over, put contracts that could suggest, where price could be going, or that price could be going down, and then just to make a little bit of money on that swing. In and out of trades, I need to get better at that. And, sometimes I fall in love with them. Charge point is one that I had fallen in love with, but, it's so wonderful. Right now, I have cash on the side that I'm not deploying, and I'm just chilling. I'm waiting for a really nice entrance. And I have to say, considering that, thinking about Tesla, I had bought Tesla at a dip over here, I believe, or no, I think it was actually over here around 185 right here. And, just one share, I'm not a big time player. And so on the way up here, I just held that, happy with it, still holding it. But then over here, with Tim Waltz bashing it, with everybody, all the stuff going on with Tesla, I was nibbling a little bit. I accumulated one more share, buying fractions of a shares on the way down. But then over here, when it was at 214, 220, I was like, man, I really want to buy another share of Tesla, but I don't have enough cash on the side to comfortably spend $220. So maybe I'll buy a fraction of a share, and that's going to be enough. But now, it's like having cash on the side, I can really take advantage of massive sales. And there was a very clear bottom indicator with this, with Tim Walz bashing Tesla, saying that, he gets a boost by looking at the stock price, checking it out on his phone. Just like a guy who's completely financially illiterate. No offense, sorry if you like him, but from what I understand, he's not the most savvy guy financially. And considering that he's bashing a company that is in Minnesota's retirement fund, that was a really bad move. And he regretted it shortly after. And yes, Tesla is now up. Look at that, 69% up from those lows. So I think that's, maybe poetic justice. Maybe this is the top though, and we start to see it rolling over. But yeah, I think it's good to be positioned so one can add aggressively when, massive sales happen in companies that you love. And really, like, the reason why I had initially gotten into ChargePoint is because I didn't have enough money to buy a share of Tesla or shares of Tesla. I could buy a lot of shares of ChargePoint. And looking back, it's really just like, however you feel about Elon, I think you got to put the emotions aside. Otherwise, you're going to be like this guy. And, I just think that Tesla's been building so many great things, whether it's the EVs, Cybertruck, whether you like it or not, I think it's really innovative and exciting. The Optimus, I think that's really going to be changing things. Autonomous, also solar cells, batteries, charging stations, charging networks. A lot of that, all of that is really owed to Tesla and Elon Musk. So love him or hate him, I think that Tesla is just a great stock. And I think it's good to have cash on the side when stocks that you love are on sale. Anyways, that's enough rambling for me. I've got about 2 minutes left. I will open it up for some requests, but I probably can't spend too much time. And so Anon is saying, can I look at my stock? I remember when charge point was 14. Yeah, so I mean, I just kind of extensively went over charge point. I've actually gone over it. Basically, yesterday's overnight market prep, I did also do a kind of extensive post on X about my thoughts on charge point. And I also covered it, I believe, Thursday and Friday's pre-market prep last week. So I try to put the not timestamps, but I put the tickers listed in the description in the order that I go over them. So you can just kind of scan through it, scroll through it to get my full picture view on charge point. But really, I mean, I'm just a little bit concerned because they got the non-compliance notice that I think that they're going to have a reverse split. Although the lower volume here does suggest to me that this pattern is probably looking like accumulation, but I'm not the best at Wyckoff analysis. I'm still learning it. I asked Grok. Grok agrees with me, and I did not try to sway Grok in any way, but Grok also makes mistakes all the time with chart analysis. No, not financial advice, whether that's from me or from him, yeah, I mean, this could be going higher, could be breaking out to $1, but I think it'd be getting rejected there in all honesty because of that looming reverse split. Once that reverse split is behind us, I think maybe then we could talk about it going higher. But I've seen it with other stocks like Luminar, ticker symbol LAZR, is still listed, but following the reverse split, it's just bled a lot. So I just have a lot of concern with the stock, with the company that needs to have a reverse split that's not able to maintain compliance or regain compliance. So, really just trying to manage that expectation. And yeah, I mean, you mentioned that, remember when it was $14, to be honest, I can't remember specifically, a price. I just know, yeah, I mean, up here it was $49. And just think about that, this, if I flip over to Tesla, this is the same time frame basically. Tesla was trading at like 280, almost 300 when charge point was around 50. So even at the all-time highs for charge point, you get multiple shares versus one Tesla share. So that's really what drew me to charge point. I remember, I think it was I think CCIV was Lucid, but I think maybe charge point was like CCIL or something like that. I'm not really sure. CCII. Yeah, I'm not really sure, but yeah, because it was a SPAC, I believe. But yeah, I mean, stocks can come down. They can come down to sub $1. They can actually go to zero, be delisted. And so I'm not necessarily saying I think that's going to happen with ChargePoint. I just think between now and when it's sustainably trading above where it's at, I think that's going to be following a reverse split, and there's going to be a little bit more bleeding. So yeah, unfortunately, that's just my kind of perspective on it. And, I could totally be wrong, and this could be breaking out to $1 and continuing up, fill this gap up here. But I just feel like there's a lot of time between now and when charge points really going up. And yeah, I've covered enough stocks that have been delisted that understandably, in my view, I want to be cautious. And so I could completely be wrong, but I think that this may pump to 1 and then pull back. But, I said I had exited around 70 cents over here. That's because the bottom was here. I'm not selling at the bottom. I'm selling after a bounce when it's come up to what looks like resistance. It's having a tough time getting above there. It has had multiple closes above that level, but yeah, I mean, I don't know. I need to see it really taking off. Oh, and yeah, I guess what I wanted to talk about with ChargePoint is maybe if I switch over to the 10-minute time frame, remove the drawings. Another thing that I guess was kind of bullish on ChargePoint was that, if the memes seem like they're going to run, if GameStop and AMC and others seem like they're going to be moving, basically a lot of what I was watching today, including the S&P 500, really just the stock market, was on a run today. I was surprised to see ChargePoint, initially pulling back and, was effectively at break even for a lot of the day. It did close the day green. But generally, I mean, maybe it's not fair to compare this with AMC, but, AMC just had a completely different shape, moving up and consolidating. That looks like a bull flag. GameStop, let's see, it was not as bullish of a day, but we see, up and down, but it did, close higher. Marathon Digital, again, different stock, but, up and to the right, looks like a bull flag. And let's just look at the SPY. This is going to be different from the memes, different from, Bitcoin miner. But yeah, this, a little bit of a pullback, but then just up and to the right. And so when we're seeing stocks across the board going up and to the right, it's not so great to see a stock kind of doing the opposite, pulling back. Whether that's divergence or it's showing relative weakness. So like ChargePoint relative to these other stocks is not looking as strong. I mean, it did close green, so maybe there's something there. But yeah, I mean, like Tesla, I mean, up and to the right. All these are, kind of arbitrary to compare. But that made me think, I was expecting that if like AMC is going to be running, I would think that ChargePoint's going to be running. Maybe ChargePoint's going to run. It's just going to be a little delayed. So by the end of the month, I would not be surprised to see ChargePoint, running for $1. And we can actually see, I'm just going to throw it up here and I'll add it to the list. If we just look at Plug Power, this recently had a run, so over here on April 25th, the end of the month, closing on April 25th at $81.16 cents. And then we see a gap up here, a close at 102 on April 28th. Hey, we're going to get close above $1 for the end of the month. That's great. But then we see this bearish engulfing candle, a close at 95.92 cents on April 29th, and it pulls back. So we saw this pump above $1, and that really just, was exit liquidity, in my view, getting retail to be like, oh, Plug's breaking out, it's above $1, but then it fades after it. And so I think, I might have covered Plug around then. I'm not sure exactly. But, when retail gets excited about something like that, we've got to learn from our mistakes. And so from there, all of my drawings are going to pop up. But, from that close, it's currently down over 20% from there. And it's been basically a month. So, yeah, that's a month of the stock just bleeding. And it's below this downtrend, below that resistance. So yeah, I mean, I feel like that there are a lot of similarities. Other stocks, Fisker, I remember trading below a downtrend, and that ended up getting delisted. So I think it's really good to seriously recognize the possibility of the reverse split, and that like I was talking about ChargePoint not going up relative to the others. Plug went up 1.68%, so more than ChargePoint did, which was 0.76%. But really, I mean, this wasn't that impressive of a day when we look at stocks like AMC, which I feel like fundamentally there are a lot of issues with this stock. I don't think you can say the same thing about GameStop or like Marathon Digital or Tesla. But yeah, I mean, seeing a move like this, maybe this just needs to roll over into stocks like ChargePoint, into Plug Power. So I think there's some hope there, but around the end of the month, just like what happened at the end of April with Plug, I think there could be a run up to 1, whether that's Plug, whether it's ChargePoint, or any stock that's trading below $1, because I think that $1 level is a pretty important one. And maybe just for fun, I'll pull up Nikola. I'm not sure if they're still listed. NKLAW. And so right here, it's delisted. But can I look at the historical data? This close. Yeah, so there were some reverse splits back here, I imagine. This is old data, so I can't even really look at the chart of Nikola, but I remember it ran up to around $1 and then dumped. So, when we see these patterns, we got to kind of recognize them when we see them again. and change our behavior. So we're not that exit liquidity. So yeah, if plug runs up to $1, if charge point runs up to $1, especially by the end of the month, that could be a bull trap. So be careful about it. But yeah, if I see charge point hit $1, I'll definitely do a video on it. But anyways, it's after the hour, so I'm going to throw this up here. As you know, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more overnight market preps and videos like this. I will be streaming again tomorrow night at 10 p.m. Eastern, going over the volatility, S&P 500, Bitcoin, Ethereum, and some fun tickers, depending on what happens during market hours tomorrow. But yeah, if this was helpful for you, make sure you